So let me get started with what
morning.
we're expecting from the Fed, because it seems that July rate hike is already baked in. But how carefully will you be watching the forward guidance, and what will you be looking out for?
I agree with your assessment. I do think it's baked in. The Fed is in blackout now, so we won't have any commentary. But lots of Fed speak going into the blackout, and everything tilting very much in the direction of getting this hike in July. The chair, of course, will have his press conference, and I think that's really where the focus will be at this meeting. I think the decision itself and probably the language in the statement is going to be pretty straightforward. But I would expect the chair to put his own stamp on his assessment of whether or not additional hikes will be needed. Of course, he'll want to reserve the option. Everyone always likes optionality to do so. There's a lot of data between this meeting and the September meeting, a very important speech at Jackson Hole. So I don't expect a particularly hard lean to indicating a hike in September, but they'll want the options open for sure.
Richard, what do you make of the inflation numbers last week? Because as Fed Governor Waller himself said, I mean, one data point does not necessarily make a trend.
Well, I respect and know Chris Waller, worked with him, and on that point I agree. But that said, I think there's more than just one data point. Some of the details in that report and in prior reports, I think, were encouraging. So I do agree, and I think, quite frankly, the Fed several times in the last several years, including when I was there, got burned when they looked at data that was improving and extrapolated that. So I think this committee will certainly be wary of declaring mission accomplished and victory, but clearly they'd rather have data like last week's than some of the numbers we were getting earlier in the year.
Richard, do you see a soft landing as still being achievable? And how should bond investors be positioning at this point?
What I see is very achievable, and I've used this term before, is a softish landing. What's the difference? In a soft landing, you actually disinflate and entirely avoid a recession. I think that'll be tough to do because I do think some modest rise in the unemployment rate, say to 4.5 or so, will be required. And typically, when we get a rise in the unemployment rate like that, it's always been designated a technical recession. So I think a softish landing with some slowdown in growth and some modest rise in unemployment is what the Fed is aiming to achieve. And I think they have a shot at doing that. But I think the important point for your viewers is that the Powell Fed will keep at it, as they've said, until the job is done, because ultimately they want to return inflation back towards the 2% longer run goal.